Welcome back to this channel. This is Unfiltered Forex with me, Clement. And in this video, we're going to be looking at a stock. The stock we're going to be looking at is TTWO Interactive. This is the stock behind this is the parent company of Rockstar Games, which is, of course, the company that makes and releases the GTA games, Grand Theft Auto. And you can see in the background, this is Grand Theft Auto 6 that's expected to be released, has been announced to be released next year, May 26th. Alright, so let's get into understanding what this company is and what they actually do. So first, even before we go into the details, you need to understand what this company is and what they actually do. So for starters, just type TTWO Interactive IR. IR is for investor relations, and you'd want to go to the investor relations website to understand what this company does. Yeah, TTWO Interactive IR. Here we are, and you can see this is the investor relations website for the company. Okay, so quickly, quarterly earnings and events. Yeah, this is the part you want to look, and there's something here called the investor presentation. This is where you want to start, right? To understand what this company is and what they actually do. You can see this are the earnings results for Q4 2025. This is the fiscal year, right? They were released on May 15th, 2025. Okay, investor presentation. Oh, here we are. So skip this part. This is the one we want to see now. Company overview. All right. Leading multi-platform developer, publisher, marketer of interactive entertainment. So you know Rockstar Games, 2K, and Zynga. This is not very common, but it's there. We'll get into it in a few. These are the most common names: Rockstar and 2K, console, PC, and mobile. And scrolling down, you're going to see listed which releases they have under Rockstar, which releases they have under 2K and Zynga. Yeah, skip this. Yeah, this one you can skip it or read it if you want. But where you want to start is with the Rockstar Games to understand what titles are under Rockstar. Let's see, Grand Theft Auto is under Rockstar. Red Dead Redemption, it's a very popular game. And actually, Grand Theft Auto V, this is the best selling game for the past 10 years in the US. And also, Grand Theft Auto Online still generating a lot of revenue for them, which, yeah, actually, this game, the Grand Theft Auto 5, was released over 10 years ago and it's still big. It was still a really big game, and now this Grand Theft Auto Online still a very big name. And Red Dead Redemption, yeah, all these names you've heard them. And moving on to 2K, this is sports, majorly on sports games. You hear 2K NBA, you can see 2K NBA. These are the names. Also, yeah, there are other games under the 2K brand, but yeah, you can see the names here. If you play them, you know them. There's also 2K wrestling. There's also for tennis. There's top spin. There's a PGA Tour. This is for golf. Yeah, they have a lot of games. And then there's the Zynga. This is pioneer in social gaming and leading mobile game publisher. Yeah, this is their leading portfolio of mobile games. This is actually an acquired company, right? It's listed somewhere here. I don't know if I can get back somewhere on the top pages. Yeah, if you read that you are interested, includes additional development headcount following Zynga combination. So Zynga was a company on its own, and then TTWO Interactive they acquired Zynga. Right? Reason for acquisition was for to expand, or rather to have some exposure in the mobile gaming section. Remember, Rockstar majorly specializes on PC and consoles. Same with 2K, they specialize on PC and consoles. And then Zynga, now the acquired company, specializes in mobile gaming. Right, and this is their portfolio of games. Not very common, but yeah, it's there. Yeah, and that's it. As you can see, there's not much here to go through. It's just understanding what they do. All this, yeah, it's not very important for you unless, of course, you're that interested in the company. But once you understand what this company is and what they do, that's it, right? You can understand the names in the pipeline. You can see this is the development pipeline, 21 immersive core games, new games company coming. You see GTA 6 under Rockstar Games launching, yeah, May 26th, 2026. That is next year. And yeah, that's it. All right. Let me not spend too much time on this. There's something else you need to now look at. You'll go back to the interactive website, investor relations website, and then now check the earnings presentation to understand what this company does, or rather how their latest earnings were looking like. So there's the fourth quarter and fiscal 2025 results and guidance summary. Yeah, you can see the numbers here. If it's in brackets, it's a loss, right? Gap EPS lost, gap net loss $3 billion. Yeah, this is in millions. You can see this is in millions, except EPS. EPS, this is $21.08 loss. And the guidance, they're guiding still another loss. But yeah, the range is within profit or loss. Yeah, they're expecting to break even in the next year, financial year. All right, so this you can go through it if you're that interested, but there's a way you can look at this. The numbers that are important for you is actually to look at the historical performance of the company. And what you're seeing here, this is only the fourth quarter and fiscal year guidance and summary. So there are websites for this kind of thing. There's one here called Alpha Spread. Let me see. Yeah, this is the one. This is the one I look at. Yeah, Alpha Spread. I'll show you why I prefer this one just in a few, but yeah, it's among the many services out there. You can go and check to look at the company's performance. All right, so let's skip this part. If you're logging to this website for the first time, these figures will be shown, right? So you'll see some numbers here. Yeah. Anyway, let me scroll down to what has brought me here. All right, so you can see this is the stock price, this line, and then the bars here represents the earnings. So you can see current price for the stock is $226, and the EPS is at negative 20 cents. Right. You see the EPS took a big hit around this, started taking a big hit around this time. This was when the Zynga acquisition was starting to really get absorbed into the company, into Take-Two, and yeah, also with the development of GTA 6, it's costing them a lot of money, and you can see that's why they haven't been making any money at all in the past 2 years actually. All right, so scrolling down, you're going to get the financials, right? So you can view them 12 months totaling 12 months, quarterly or annually, to get a good view, like a really nice view of how this company is performing. The annual financials are what's best to look at, right? So you can see it's going to show you over the past 10 years. You can see this is from 2015 up to present 2024, and these are projections. If it's grayish like this, these are projections, but this is the latest one. All right, so you can see operating income negative, net income negative, EPS negative, operating cash flow negative, free cash flow negative, meaning they're not making any money, right? This is not a good look for any company's financials, right? But looking deeper, you can see the trends, right? This company has been making money all along, like since this is around 2016, 2017 actually. They've been making money all this time, and then something happened in 2023, rather in 2022, and then in 2023 and 2024, they have been losing a lot of money. And you can see that is being reflected across all these metrics. Operating income, yeah, it started to go negative in 2023. Same with net income, same with free cash flow. In 2023, that's when it's turned negative. And in 2022, that's when it took a really big hit, right? So to understand why this is the case, like you've seen, they made an acquisition some time back. Is it here? It's this one. They made an acquisition some time back. Yeah, recent acquisitions. They made an acquisition in the fiscal year 2023 of Zynga. And this company, it was quite expensive, right? If you read around, you'll find it cost them I think it was $2 billion, I think. Yeah. So it was expensive, and as you can see, 2023, that's when the company really took a big hit on their financials. Yeah, the deal was finalized in 2022, and in 2023, that's when both TTWO Interactive and Zynga now are completely combined, right? And that's where it became expensive for them. And on top of that, you see they have the development of GTA 6 coming along, so it's not looking well for their finances the moment. If you check quarterly, yeah, you can see, you can pinpoint the exact place where the earnings started taking a hit, right? This is net income started turning negative around this is Q2, Q3 actually. This is Q3, Q4 of 2022. That's when it started turning negative, and they've been losing a lot. You can see on 2024 here, they had a really big hit. This is $2 billion negative net income, and yeah, that's just the way it's been. Unfortunately for this company, what makes it, I don't say a bad company, but what makes it at a huge disadvantage is the reliance on big names to make money, right? Because as you can see, is it here? No, it's here. As you can see, this company is a gaming company, and their last big release was 10 years ago. GTA 5. It was over 10 years ago. So, and even the late other releases since then, they haven't done that well. They have this reliance on what do you call it? On hype. Yeah, a reliance on hype and just big names and big brand names like Red Dead Redemption, GTA, and the 2K series to make money, right? And that can only take you so far. When your last big game was released 10 years ago, so you can see the revenues here, they kind of plateaued since 2024. Yeah, in most of the recent quarters, the revenues haven't been growing so much, right? So moving on, there's something else you need to look at. Or there's a balance sheet decomposition, assets, liabilities. So this company is, yeah, not looking too good, especially when you consider the fact that intangibles is worth 72% of the assets. That's not a very nice position to be in. Any company whose stock you want to buy for the long term, that's supposed to be a solid name that will do well in the long term. You don't want it to be relying too much on intangible assets, right? Like a brand name, because a brand name can be easily destroyed, especially when it's involved in a series of scandals and um yeah, it really damages the brand and the reputation of the company, and that really devalues the intangible assets so much. So that's why usually a company that has this much intangibles isn't a really good stock pick to begin with. So far we spotted these two problems. There's the negative income and the balance sheet that's not very strong. This is a weak balance sheet. If you're relying too much on intangibles, it's not very nice. All right. What? There was something. There's something. This cash flow analysis. You can skip this one. Just go over to the margins. Right. As you can see, same with what we saw with the incomes. The margins started taking hits in 2022 and in 2023. That's when they turned negative completely. Yeah. So I'm sure you know what margins are, and when they are this big on the negative side, this isn't a very good position for the company to be in. If your net margin is 67%, oh, that's not really nice, right? You can see even these ones, they just look not looking good, and that's the big disadvantage with this company: the over reliance on big names to do good. And even recently, it's still relying on the revenue that it's expecting to generate from GTA 6 once it's been released. That revenue they're waiting for is what they're expecting to turn these numbers back to positive. Like you can see over the past few years, the margins have been positive and actually growing, but was quite slim, right? The peak was only 19%, right? And there are not that many companies in this scene to compare to, but you can see 19%, not exactly a very nice position to be in. And this stock is actually overvalued, right? You can see lowest forecast 138, average forecast 31, highest forecast 283, and the current price is $220, which is an overvaluation by almost, yeah, by over $100, because when your company is has such bad margins, it's literally negative. The return on equity is negative, return on assets negative, return on invested capital negative. All these are not very promising numbers, right? And yeah, when company is looking like that, and you can see how the stock price has been gaining these past few months, it's not a very strong trend, right? This trend is, yeah, technically speaking, like technical analysis and stuff, this trend looks strong and it's stable, but what it's built on, the financials of the company, they're not looking very strong. And that's why this company is not a very good pick at the moment. Right. I don't know if there's anything else I want to check over there. So this is not a very good time to buy it. Unless of course if you're going to buy it, it's you are planning to take profits along the way, probably before next year when the actual game is launched, the actual GTA 6 game is launched, because this recent uptick in the price is based on the expected earnings from the GTA 6 release. And remember, they said they're not releasing it on PC this time, which is quite unusual. And PC is a big part of the gaming industry. Let me see. Yeah, I can see this global video game markets, mobile and PC. Mobile and PC. These two colors here, these two columns. Blue one is mobile, and this brown one is PC. These others are consoles. So the PC market is a really big market, and the the company Rockstar Games, they said they will only release GTA 6 on console, no PC at first. So that alone is enough to tell you even the revenue they're expecting to generate from the sale of the game GTA 6 may not be as much as the market is expecting, because they're leaving out a really big chunk of the market, the PC market. But if an announcement comes later in the year or even early next year that they're also going to release it on PC, then their revenues might actually do well on top because of that, and even the stock might rally because of that. So at the moment, this is not a good company to buy into. This is not a good stock to buy because of these numbers, these negatives they're starting to hit. They're not easy to recover from because of where they're coming from. Declining revenues from pre-existing game names, and also the recent acquisition that they don't seem to be handling too well. So yeah. Anyway, I don't want this video to be too long. That's it for this one. In case you're interested in finding more about the stock, you can see this website and you can just check it out for yourself. And then later, or rather, you can expect the next earnings release and even look at the current and previous ones to see more about the company and go into details about how they earn. But for now, this stock is not a good good one to buy at this time because of these large negatives. So if you see signs of recovery, strong recovery, based on if they absorb the acquisition well, yeah, then at that time it's going to be a good time to buy, right? But for now, I wouldn't. I'm not saying the stock price is going to fall. It may continue going higher, but the upside potential is limited by the weak financials. Alright, so that's it for this video. I hope you enjoyed it, and yeah, have a lovely day.